Well, welcome once again, everybody. Devin Kroner, the real estate pastor, here with Melinda Smith from New American Funding. And we are going to talk a little bit about credit readiness. Now, Melinda, you've told us before, credit is super important as a part of this process for somebody to get a loan. But walk us through the why, the how, what even is credit to some degree? Impart to us your wisdom.
So I always tell everyone it's easier to build credit than fix credit. So if you're educated from the very beginning, coming right out of the gate, you know the ins, the outs, the pros, the cons, the do's, the don'ts. So everyone should review their credit at least once every 12 months. You can get a free credit report every year at www.annualcreditreport.com. It will give you your credit report. If you want your actual scores, you have to pay for those. I do recommend that people get some kind of, like MyFICO, that's a good one. Credit Karma, some of the other ones, what they do is they give you your credit card score. So there's 3 credit bureaus, and you get 3 different credit scores from each bureau. So you get a credit card score, which is usually your highest score. So like someone will I'll ask someone, what's your credit? And they'll, it's 700. I'm looking right now. It's a 700.
Credit
and then
Karma tells me my
credit Karma says
700.
Yes, like the Magic 8 Ball. Yes. So, and then I pull their credit and it's a 680 or a 670. They're like, that's wrong. And I'm like, it's right. And I said, because credit cards, they're very easy to get. And then you get another credit score to buy a vehicle. And then the last one is your mortgage score. And it is going to be the lowest of those 3 scores because the algorithms are different. You are borrowing a large amount of money for a long period of time. So that's the difference. That's why there's a difference in all of the numbers.
So that Vantage score, because again, if you're in the Credit Karma app, NerdWallet, a lot of them, even some of your credit cards. I know I have a Discover card. It says, here's your credit score. But they almost always say Vantage score when you click on it and read it. So that is not the credit score that you are going to use, that any lender is going to use to give somebody a pre-approval to buy a home.
Correct. Yes. The other thing I tell everyone, are you a co-borrower or a co-signer for anyone? So that, because if you are a co-borrower or co-signer, whatever you co-sign for is showing up on your credit report. And now I have to consider that debt. Because the actual borrower, if they default on that debt, the bank is coming after you because you sign on the dotted line that you are the co-borrower or you co-sign.
So you signed for your best friend to get a car because they have terrible credit, and that now counts on your credit, not their credit score, but the amount of the loan for the car, even if you have your own car loan on top of it. So now you've got 2 car loans.
Right.
And if they don't pay, the whole point of a co-borrower is now you're responsible.
But yes, and if it's paid late, that's going to show up on your credit report and it's going to bring your credit score down. So it will get figured into your credit score. I had a young lady that I worked with for about a year, getting her credit cleaned up. So I was calling her for our regular monthly, like, are you ready to go? Are we ready for that pre-approval? And she said, yes, I'm ready. She said, I just got to tell you something real quick. And I said, what's that? And she said, I co-signed for my friend to get a car. And I was like, why? And she said, well, it's not a big deal because he just needs somebody to sign so he can get off the lot. And he said in 30 days, he's going to take me off of the loan. And I'm like, it's not up to him. And she said, well, but that's what he said. And I said, I know, but it's not up to him. It's up to the bank that lent him the money. Now, if he pays his payments for 12 months and he's not late, you can petition to have your name removed. But if he's late, they're going to keep you on there. So, yeah. So that was a big wake-up call for her. She didn't realize that.
So co-signing a loan, especially to buy a house, having a family member or somebody co-sign with you, there can be benefits to it.
There can be.
But it can be a big risk.
It can be a big risk. And the person who's taking the risk is actually the person who is co-signing or co-borrowing. They're the ones that are taking the risk because they're kind of like the last stop. So all the banks and the mortgage companies, they all want their money. So the people who are on the application, they are going to them for the money if the person who is the original borrower defaults on the loan.
I just want to stop and point that out. They want their money. They're
Yes.
not just giving out money for fun.
Correct.
They want the money back.
Yes. They do want the money back with interest.
And that's important to remember, that if you don't make your payments, they are going to come after you in some way, shape, or form.
Correct.
To get the money back.
Yes. Yes, they are.
Some people don't know that. That's why I stop and point that out.
There's a lot of people think, well, if I don't, I just won't pay it. I just won't pay it. And I think for a lot of people, if they don't understand credit, how those fees can just add to your debt. You know, it's like, I had this credit card and I charged it up to $1,000 and now I owe $1,500. How did that happen? It's fees and interest from you not paying. So yeah, we always want our money. So you also want to make sure that you have not had any late payments over the last 12 months. Some loan programs, FHA, you can get a pre-approval if you have one 30-day late, as long as it's not a mortgage. Don't want a mortgage to be 30 days late. But if it's any more than that, somehow we've got to, it either needs to fall off, it needs to be 12 or 24 months old before it's not considered. The other thing is, we work with a company called UQual. I have my own UQual team, and they are able to dispute things and get late payments to fall off. So that's what they get paid to do. So they're pretty good at it. Student loans are going to be the death of me.
You and almost everybody with student loans.
The amount of loans that people have accrued over the years of going to school. I had a couple that they made good money. They made 6 figures, but they owed $350,000 in student debt. They were only approved to buy a $145,000 house.
I don't know what market you're buying a $145,000 house in right now.
Well, it was a sweet deal. It was a very sweet deal. But we have to consider that student debt. So people will tell me, well, I have an income-driven repayment plan and it's 0. That's great. Or they're in forbearance, so I don't have to pay anything right now.
Which has been a pretty common thing the last couple of years, especially.
Yes, and those loans are still growing interest. So I tell people, you've got to have an income-driven repayment plan for an FHA loan with a payment greater than 0. You can give me a letter that says you're paying $1 a month. That's fine. Then I can consider that. If I don't have an income-driven repayment plan for an FHA loan, then I have to consider 5% of that balance, or I'm sorry, 0.5% of that balance as a monthly payment. That can be hefty.
Wow. Yeah. If you got $300,000 in student loans, even 0.5%, that's that's a month. Dang.
Yes. And it's like, it could be $200, $300, $400, $500, $600 a month that I have to consider, which takes a considerable amount of money away from your purchasing power. So yeah, the student loans are just, and I don't think people have realized like the toll that it's going to take on them in the future. And from a mortgage,
nobody explains that to you when you're 18 years old.
No. And from the mortgage side of it, yes, it may be in forbearance, but at some point in the next 30 years, you're going to have to start paying that back. So we need to know how much can we put in as a monthly payment, because we have to allow for that. If we take you to the top of your DTI and we don't consider your student loans, and in 5 years they come due, and now you've got a $200, $300, $400 a month student loan payment, and now you're strapped and you don't know what you're going to do.
Wow.
Now on the conventional side, we have to take 5% if you don't have an income-driven repayment plan. Conventional loans, you can have an income-driven repayment plan with a payment of 0. But I don't do a lot of those very often. But yeah, student loans are trying to explain to kids when they're going into school, please do not take out hundreds of thousands of dollars in student debt.
Wow.
You don't need to go away to school. You don't need to live on campus. You can live at home with your parents and pay in-state tuition. There
are a lot of ways. There is a whole debate, which is not the point of this video, but even about the validity of the higher education system And again, I can tell you that there are great jobs. I work with contractors, plumbers, electricians, HVAC people that they've gone to training. Don't get me wrong. They've gone to technical school. They've gone to training. But what they had to pay to get their certification, much, much less. And these are people that probably make more money than I do, some of them, and have great jobs that are never going to go away because there's always going to be a need for plumbing and HVAC and all that. And they didn't take out $1 in student loans.
And the other thing is, for whatever they are licensed in or certified in, they don't have to call a repairman for that. Think about how much it costs an hour to have an electrician come into your house.
Oh, absolutely.
Or a plumber, or someone to lay tile, or whatever the case may be. You know, so that's one thing that you do not have to pay someone to come in and do. So my son, he graduated with 2 degrees. He has an MBA and he has an engineering degree. And he told me when he started work that there were guys that were on the job site that made more money than he did. And they didn't have 1 day of college. They were all certified in skilled labor. So I had talked to him a couple years ago, and he told me, he said, Mom, there is such a deficit with skilled labor right now. If you brought me 200 skilled laborers, I could put every single one of them to work today. Today. So there's a big need for it. And I had asked him, I told him, I said, when I was in school, you know, kids could go to school for that. They can go to electrician school while they were still in high school. I said, have you guys ever thought about partnering with some of the area high schools and try to bring that back? And he said, funny you should say that. We have started doing that.
Because it is such a need. And again, I'm not knocking higher education. There are certain things that you need that degree for. There are definitely certain things, like I want a doctor who's gone to med school.
Exactly.
I want my dentist to have gone to dental school. Absolutely. But it just, there can be alternatives depending on what somebody wants to do. It really is incredible. I know the only master mason in the Northern Kentucky, Cincinnati metro area. He's the only one, and he's about retirement age. He goes, I can make $600,000 a year just to oversee masons who are not as qualified as he goes. I don't lift a spatula or lay a brick anymore, and I'm still making over $500,000. Because the problem is there are so few people for me to oversee. I can't retire because there's nobody else to do my job.
And you know, that's somebody who's dedicated.
And I'm like, $600,000 a year? I'm in the wrong business.
I'll do it. I'll pick up a spatula.
So now that doesn't have to do anything with credit readiness other than just the student loan aspect can be very detrimental. So if you're younger, if you're in school, maybe you're watching this and you haven't graduated yet. Look, if you're locked into a career path in school, great. Finish that degree, get that degree. That can be valuable. But if you don't know where you're going in life, don't just keep taking out student loans. And be a professional student, because when you want to come and buy a house, that can be a problem.
Exactly. Yes. And a lot of these kids are going away to school for an experience. And that experience is costly.
Go to summer camp for the experience if you need to.
There you go. Yeah, I got into a debate with a mom about that, about if we were going to let our son go away to school. And I said no. And they said, why not? I said, because we can't afford it. We can't afford to send them away.
They can't afford it a lot of times.
Well, but kids don't realize that when they're 18 years old. You know, they're like, I can.
For sure. So what else here as we're
collections. Collections are a big deal. Check your credit. Make sure that you don't have any more collections than $2,000. $2,000 is the max that you can have.
Hopefully no collections.
Well, that would be ideal. It's rare. Especially if it's first-time home buyers. Yeah, because they're just not that they're negligent, they just don't understand. And when I talk to people about credit readiness, I tell them, I'm like, listen, I don't want you to think that I am this overly intelligent person and I'm up here. And I'm like, if there's a mistake to make with your credit, my husband and I have made that 2, 3, 4 times. We didn't understand credit. I had no idea how it worked. I had no idea how it was calculated. I just didn't understand it. I didn't understand what you can do that can drop your score quickly or what you can do to bring your score up. And if your score drops, I can promise you it will take a long time to bring it back up.
I remember being 18 in high school, and there was a booth set up in our cafeteria from Capital One, sign up for a credit card, and they were giving out like $50 gas cards just to sign up when you turned 18. I think everybody who was a senior in high school signed up for a Capital One credit card in my school because we got a $50 gas card. And then I find out, 2 weeks later, I get a card in the mail that says, hey, you've got a $2,000 credit limit. I didn't even have a job.
Right. Well, they used to be on the college campuses, and they're not allowed on there anymore to do that.
Right. But, I'm a certain age, but I remember that.
Yes.
And it's very easy to fall into that trap. And you're right. We don't, unfortunately, teach this important aspect to, high school and college students. Thankfully, the National Association of Realtors does have a great program to go into schools that I actually am certified to teach in schools. But you know what I think is interesting is I've reached out to a couple of high schools in our area and they're not interested in it.
Really? I've taught financial literacy to some of the high schools down in South Carolina. I've not approached anybody up here, but
it was
amazing.
I've
been invited in. Yeah, that's crazy.
So but it can be a big deal. And of course, if there's collections, then that can go into the next thing you have, which is liens and judgments.
Yes. Check your credit report for liens and judgments. Have you been sued and you haven't paid? Have you broken a lease? Your landlord probably went to court and there's a judgment for you to pay that money that you ran out on. Do you owe them 2 months worth of rent, 3 months worth of rent? And judgments I don't see very often. I've seen them one time, and trying to explain to a borrower, okay, you got $2,500 in judgment on your credit report. That has to be cleaned up before we can move on. And they're like, well, I don't owe that money. Did you sign a lease? Yeah, then you owe the money. If you sign a lease, you are there for however long you sign for. If you break that lease, the apartment complex, the landlord, whoever the case may be, they're going to want their money.
Now, can they still come after you for that if they agree to let you out of the lease early?
I don't think so. There's probably some kind of a monetary agreement between them and the renter. I think it's usually if you break the lease, like you just pack up and just go.
Okay. But if you go to them, hey, I'm buying a house and I've still got 3 months left on my lease, and they were like, okay, we can turn around and rent this thing tomorrow.
Right.
Then, but make sure you check your terms and maybe consult with an attorney. We're not attorneys.
No, we are not attorneys.
But they could potentially say, oh, well, I'm buying the house, I'm leaving, or I'm moving to another city for a job. If you don't have their specific permission in writing, then they can still come after you for that money.
And it is just the responsible thing to do.
Sure.
I'm being transferred. I bought a house. If you give them enough notice, they're probably going to be able to find another renter to come in and take care of that. So, let's see. Disputed accounts. So, a lot of people will just dispute their accounts if they are behind. They've got a late payment. They've got a collection. They will dispute it. What happens is that disputed account, that credit score that you've got for that specific account, will be removed from your credit score. So the credit score that I get isn't a true credit score because it's missing the score for those disputed accounts. So your credit score probably is much better. And then when you remove the disputes, then your credit score will drop. So if you don't work with a credit repair company to fix those disputes, they have to be removed. And then I've got to re-pull your credit.
But I want to point this out because you said credit repair companies. I have worked with some great credit repair folks. I had a miracle worker credit repair company that helped somebody go from like a high 400s to 680 in less than 6 months. But she had legitimate issues on her credit that they were able to dispute and get off. And then she, paid off a lien and all this stuff. But there are some predatory credit repair companies. And just because something's on your credit that's bad doesn't mean that you dispute it and take it off, especially if it's legitimate.
Correct.
And some of these companies will say, oh, pay us $90 a month, $100 a month, and we're just going to dispute everything. Well, you had your car repossessed. You had your car repossessed.
Right.
You can't dispute that away.
No, you can't. So I do have a credit repair team. My company partners with UQual. And so there is a reduced rate that we charge our borrowers to use them. And I meet with my team once a month to go over my borrowers and their situation and what their scores are currently. And the whole idea is to get them pre-approval ready. And I've had people give me a little bit of pushback and say, you know what, they're just going to drag this out as long as they can because they want to make more money.
Mhm.
I'm like, it doesn't work like that. So they do get paid an
The
hourly
good
wage.
ones
Yes.
have a
but
plan
yes.
and a timeline.
Well, they get paid an hourly wage, but where they make their money, they get a bonus for every time they get someone that they're repairing their credit when they get to the closing table.
Mm.
They close a loan, they get a bonus. Nobody wants to wait 12 months for a bonus if they can make it happen in 6. So the team that I work with, they are very reputable. It does take the borrower, they have to do their part.
Mhm.
So they're going to lead you through it and tell you what to do. This is what they do for a living.
Mhm.
They are much better at it than I am. But if you listen to them and follow their direction, you'll get there.
Mhm.
Yes, it takes some people longer than others. It just depends on what needs to be repaired. Is it a time thing where we just we're waiting for something to fall off your credit report or whatever? It just depends. And
Mhm.
everybody's credit's different.
And that's the key. Everybody's credit is different.
Mhm.
But if they have questions, they can talk to you. You can
Yes.
help them evaluate that. You can help them understand that.
Mhm.
I mean, I can to a degree, but I am not as proficient in this as you are going to be. But that's why we work as a team.
Yes.
There are some questions that I can, you got a 400 credit score. Can I buy a house? No, I
Mhm.
know that answer.
Right.
But no now doesn't ever mean no if you're willing to put in the work yourself.
Yes. And I tell my borrowers, I'm like, listen, you have a team. So it's me, your realtor, you, in credit repair if that's what we need. And we all have a job on this team.
Mhm.
And everybody has to pull their weight to get you into a house,
Mhm.
including the borrower.
Mhm.
You've got to do your share.
Yeah, absolutely. Awesome. Well, thank you so much. Really appreciate the information, and I look forward to talking to you more very soon.